Well, we have an awesome opportunity today. We are Liberation Day +1. Obviously, the markets are reacting in a very negative manner. But I had a podcast scheduled with Walter, so rather than me just sending out a video talking to all my clients and letting them know what I think, I figured I'd bring Walter into the mix a little bit. Walter, how you doing this morning?
Well, Ryan, I'll tell you what, it's funny because I can talk to you on here every week and get advice, get guidance, try to have the right perspective on these things. But then when you look at your own portfolio or your own account and you see it going down, sometimes you can't help but let those emotions take over and make you start to worry and get concerned. And when you just start seeing all that red on your personal charts, like, that's not a fun feeling. And so it definitely, I'm not saying I've done anything, but it just makes you go like, what should I be doing? Should I be doing something else? It just kind of causes that irrationality to come in.
Yeah, and that emotion's normal. I had a client the other day saying, I don't like this or I'm not happy. And I'm like, well, I'm not happy either. Like, I don't enjoy, when the market has a downturn. And sadly, we can't control the market. We can't control the market, what it's going to do. All we can control is our exposure to it. I don't have some magic pill when the NASDAQ's down 4% one day to all of a sudden have a gain. I mean, it just doesn't work that way. And the thing to consider is everyone around the world is dealing with this market. I mean, if you look at a lot of these indices overseas, they're getting crushed as well. Why? Because there's a lot of unknowns with the tariffs. I think it's a lot of short-term pain. We'll have a long-term gain out of it, especially as a country in the U.S. I actually think we've already had massive sell-offs because of the tariffs. So I think a lot of it's already done. Obviously, today is going to be a little bit of an ugly day. But if you're not in retirement, this is nothing but a massive opportunity. I mean, we have a lot of our funds, of course, working really hard and diligently over the night. We have a lot of our funds sitting about 45% in cash. Not trying to avoid what's happening today. Obviously, we don't want to ride it down 4%, but it's a lot more about buying those deals that are out there. There's massive deals right now, and we're going to be able to reallocate those portfolios and buy those deals, and the market will turn. No different than Brexit, no different than the '08 crisis, no different than the tech bubble, any of these things, COVID. The market will turn, and it's all about taking advantage of that. We make most of our money in the down market. We just don't realize that. So the pain of what you're feeling when you see the red, it'll all go away. Probably 6 months from now, we won't even remember this. Is my prediction. But we're going to try to take advantage of it and get some of those great returns when the market does take off.
It's interesting how your perspective changes on your time horizon too. So like any short-term accounts that I have that have sort of that short-term focus or goal that are just getting hammered, it's like annoying because it's like, oh, I might actually want to use that money soon. So this is no fun. But in our retirement accounts, we're increasing our contribution rate. Last month we started increasing it. This month we're increasing it even more, saying, hey, why not go ahead and pummel more money into the 401ks and the IRAs if we can do that, earlier in the year rather than later, and take advantage of a falling market by saving more, those buying opportunities that you're talking about. So
Absolutely.
Easy to see the benefit from a long-term perspective, but then it's the short-term goals that get disrupted, I guess, the most and cause that emotional response.
Well, absolutely. And I know we talked a couple of days about how I've told a lot of my clients to crank up those 401k contributions. Let's hit those limits now while the market's down. A great buying opportunity. But you bring up a great point. If you're in retirement and you're on a fixed income or, you're watching your withdrawals, it's not a fun time, but this is something that you've planned for where you have safe money or we have it built into the portfolio. They'll know, hey, the market could be down and we're taking some distributions at this time. Are they coming from some safe money assets or assets that aren't down? And that's why you want to have a very diversified portfolio overall. Something that's 1 to 2 years of money, 3 to 5, and then a lot of that money that's still long-term that you need that growth. But it doesn't make it fun if you're in retirement at all because you're watching that one number that you can't really change anymore drop. And so I feel for those individuals that are in retirement 100%. But this is something that we know is going to happen. Okay. So when we look at your distribution strategy and your income strategy in retirement, we know there's going to be down markets. Okay. And you plan for that. Sequence of returns risk right when you do retire is probably one of the worst times. And there's ways to plan for that as well. What I started thinking about though, and we talked about this the other day on one of our podcasts, just putting it in perspective. And what I mean by that is when we consider a 4% safe withdrawal rate, and that's whether it's an up or down market at all. So we have a couple months of a down market. And if you consider that you're under a 4% safe withdrawal rate, I forget the exact number, but I'm going to say it was like 0.33% of 1% is what you're actually pulling out per month.
Yeah.
Okay. So you're not blowing up your whole retirement plan just because you have to take a little bit of income for a couple months during a down market. And then the last thing I'll say too, and I tell my clients this all the time, just to put it in perspective, because I think sometimes we really need to put things in perspective to feel better about them. And I don't know if the next 10% or 20%, even where we're at right now, is up or down. I have no clue. But I know the next 100% is up because it always is. Always is. And if I had a prediction, I think 2025 is going to be a magnificent year overall. And I think 6 months from now, we probably won't even remember this.
Interesting. And I know when these kinds of times hit, people are always looking for advice, Ryan. So what is that advice? Do nothing, stand by, increase contributions? Like what are some tangible things people can do right now?
Well, I 100% think you should increase contributions or buy into the market if you have the ability to do so, if you have cash sitting on the sidelines. I think one of the worst things that you could ever do is go to cash, because then you're not going to know when to get back in. And when the market's going to take off, it takes off fast and you're going to miss it. I know many people that have been sitting in cash for over 2 years because they don't know when to get back in. Now, something that's really changed over the years, and I think this has a lot more to do with technology, AI, automated trading. I used to be a proponent of just a strictly passive portfolio with low-cost ETFs and just let it do its thing, where you're riding the market down and the market will turn and you'll ride it back up when it comes. And I think with algorithms and AI and automated trading, that's a little bit of a thing of the past, where right now you can reallocate your portfolio and take advantage of a lot of deals and get some of those sectors or stocks that are really beat up. And if you're able to do that, then as things turn, you get a little more bump in your return as we come out of this. And like I said, I'm not trying to time the market, but we have a lot of cash sitting on the sidelines, which I like to call dry gunpowder. For those deals right now. And, historically, we've done very well at taking advantage of stuff like this.
Well, thanks for the perspective, Ryan. I think that's important to get out today, and hopefully people can, find some calm amidst the storm with that perspective. And if you haven't taken, especially if you're a pilot and you haven't taken steps to secure your retirement future, to put together a solid financial plan, and you're looking for that place to start today, if this has kind of woken you up a little bit to the volatility that's out there and how you can properly plan for these things, you don't have to just kind of be a passenger along the way all the time. You can certainly take some proactive steps here to have a better situation. Pick up Ryan's retirement toolkit. It's very easy to get. You just go to retirepilots.com, get the toolkit. It's packed with Ryan's books, informational guides, a great way to get your starting point into the retirement planning process. Eventually, that often leads for folks to go through the planning process with Ryan and the team at Pilots Advisors. So reach out if you've got any questions, but definitely get the toolkit. That's the place to begin. Again, it's at retirepilots.com, and we've got that linked in the description of today's show so you can find it easily. Ryan, thanks so much for the help and the perspective today. And I know we'll be chatting about more of this over the coming weeks and months.
Well, absolutely. And the last thing we want is investors to be what I call flying blind. And since most of our listeners are pilots, imagine like flying at night. There's a lot of weather out there and you don't have a radar to see the radar picture. And I think a lot of investors that either don't know what they're doing or they're just, trying to just get out of the market, and you wouldn't jump out of the airplane if it had a bunch of turbulence. So why would you do that with the market? And so what you want to do is actually have a plan and have a system. And if you don't have that, you need to reach out to us so we can help you out.
Yeah, just because you have the radar doesn't mean that you're not going to face obstacles and challenges and issues on your journey, but that radar or that plan in the financial realm is going to help you still navigate through those challenges way better than if you didn't have any of that instrumentation. So that's what we want to get in place, is the instruments to do the proper planning and overcome the obstacles like we're facing right now with the down market. So that's really helpful.
100% agree. Thanks, Walter.
Awesome. Thanks, Ryan. We'll see you next time on the Pilots Advisor, everybody.
Information is for illustrative purposes only and does not constitute tax, investment, or legal advice. Always consult with a qualified investment, legal, or tax professional before taking any action.